Good evening, future and current funded traders. Right, we've got another action-packed training session tonight. I'm going to start off with a recap on last week. So do you remember, if you watched it back or if you're on the call, I talked about the training balance scale and about a lot of people get that scale. They think about the how so often, like, how am I going to get there? How am I going to get funded? How am I going to do this? How am I going to do that? And a lot of the time, we actually don't know the route. And the reason I bring it back up again is one of my biggest goals has been to make 10 grand a month. It's been on my, you know it, Rex. One of my biggest goals is to make 10 grand a month. That number for me is significant. 5 figures in a month. Something about it resonates with me. I don't know why. And I've been getting close, getting closer. And the reason I bring this up is because out of nowhere, Hyperfund's pretty much got me there. And I wasn't really expecting it. So trading's just one thing, guys. It's just one of the ways we can earn money. Don't pigeonhole yourself. If you're in Hyperfund and you're not doing trading, learn both because they're both lucrative. They're both really, really good. So I just wanted to recap that because I think sometimes when we get bogged down with the theory, but it's actually, for me, that was like an epiphany this week where I'm like, geez, I'm nearly making as much from Hyperfund as I am from trading. And I don't have to do anything for Hyperfund. So I'd share. Not to blow my own trumpet, but I haven't done anything special. It's just following the process. So I just want to bring that up. I do have a task, absolutely everyone on the call. So everyone on here, if you've been and heard me say what I'm about to say again, if you heard it before, then go through it, redo it. But every single person, I want you to all write 100 goals. Okay, I don't care about like what you want to achieve by when. I just mean, like, in an ideal world, if you had everything in life that you wanted, health, finance, time, income, freedom, it doesn't matter what it is, just like if you see yourself in the most perfect version of you, write 100 things that you would want to achieve. It could be materialistic, it could be owning a house, a mansion, what type of car, what sort of income you're going to have. Like, just have a really good, clear understanding of, like, this is me, that's me, this is me at the peak, this is me at the top of my game. Write down 100 goals. It's really, really difficult. 100 goals is difficult. And when you've written down your 100, go through them. And then on a scale of 1 to 10 next to each one, write your belief in yourself being able to do it. So start with the 10s. So if the 10s are like pay off a credit card, I don't know, whatever the things you can see yourself doing soon, start with them and cross them off. Get them off your list, and then revisit your list over and over again until you've achieved 100. All right, it's powerful, honestly, and it keeps you progressing, moving forward. One of yours, I would have thought, for most people on here, is going to be funded. Yeah, that opens the doorways, so many opportunities. You get cash flow. From the skill that you've learned, you can invest that into other things. So write 100 goals. Please put in the chat in our group when you've done it. You don't have to share it in private. You can share it if you want to. I think I've shared mine before. 100 goals, then rate each goal out of 1 to 10, like how much you believe you can do it. And then keep revisiting that list over and over and over again. All right. Okay, next. So some big news this week with FTMO. Some big news. You should be able to see my screen. So just for the record, you can use anyone you want. I use FTMO because I want to be paid in pounds. You can use whoever you like. Absolutely not tied to anyone. But FTMO, I think, have just put themselves way ahead of everyone. Way ahead. So not only can you be paid out in pounds, but they've just changed their profit split. So they were 70% of your profit you get paid, which is kind of lagging. It was lagging behind, you know, funding talent and other, obviously, other competitors. There's loads, my Forex funds. So now there's a flat rate of 80%. So I'm going to share this in the, I think I shared something anyway, but let me share this in the group. I want you all to take a look over this because it's our business. You know, it's what we do. We need to know how we get paid, how much we're going to get paid, and if we're in the right place. And I firmly believe that FTMO is in the right place, or we're in the right place. So they pay out in pounds. They have a flat 80% profit split, which is detailed here. You get 80% of any profit you make. If you then activate their scaling plan, you then get 90%. So I am literally a week or two away from having the scaling plan activated. So I've basically got a 20% pay rise in a month. They know hyperfund's doing well. They want to try and claw some of my attention back, you know. But hey, it's all good problems to have. I'm not worried. But no, honestly, amazing. So when they're up at 90%, I do think they're probably the industry leader at that point. Really good profit split. They've got the longest history of any prop firm that I've looked into. And 90% is just ridiculous. 80% is really good anyway. So they just keep raising the bar. They just keep reinforcing that, you know, they don't want to lose their traders to less, with less longevity. You know, companies that are newer, that are offering more, you know, that they are led by sometimes the money and less of the quality sometimes. We get greedy. But I just think now they've got the focus. Their audience is back. They're like, yeah, knows the place to be. And I honestly definitely believe it. The other wicked thing, which this wasn't talked about too much. So let me tell you a little story, be quick. I was just about to start my second and third tests. I've been trialing a trade copier. So I put it on my main account and it will copy it to my test accounts. And the reason was I wanted to have 3 payouts in a month because they pay out once a month and it keeps, like, you know, you get paid out on the 31st, you get your next account by the next day, and then your profit split day moved in the month. So I was like, all right, in 5 months' time, I'm going to miss all my direct debits and I'm going to have to, it started to play on my mind. So basically now I don't need to bother with that because I can choose when I take my profit, which again is insane. Imagine you got something, you know, you're going away on holiday or whatever, and you want to do your profit before you go. You know, 2 weeks after your payment period started, then choose the day in the month to get paid. But that's pretty sick. The power is now in your hands. So familiarize yourself with this. And nothing else has changed. So you've got the same, all the other things are the same, all the qualifications to get the account, all the like the daily loss limit and overall loss limit, all of that's still the same. However, they've just updated bits to really make a difference. And your profit split day. Really, really good. Really, really good. Any questions on FTMO before I move on?
How does the scaling plan work?
Good question, Rex. Good question. So it is in here, but it's pretty straightforward. So it's a rolling 4 months. And you have to, in those 4 months, you have to have 10% increase. So if you do 2.5% a month for 4 months, you qualify. So you could have months where you're 7% up, 10% up, then you might have a month where you're under, and then the next month you're over. You can't have like 3 months where you're under and then 1 rampant month. It has to be at least, I think it can only be 1 month where you're under. So you don't always get a payout. Like obviously, if you finish under the starting balance, you just keep going until you get it back. So if you do that, you you know, it's pretty hard to qualify for. But the interesting thing, what I found out this week, that I thought they tell you when you qualify. So they'll go, Chris, you're amazing. Here's some more money. They don't. You have to apply. You have to email them. So I could have had it last month, but I didn't realize. So yeah, that's how it works. 10% over the 4 months, and then that's a rolling 4 months. So every 4 months from now on, you can do that up until, I think it's 16 months, something like that. So you can basically double your account, which is nice. It's good, really good. You get 25% increase on your original balance, and then say I get another one in the next 4 months, I get another 25% on my original balance, not the new balance. It just grows by 25%, up to 4 times, hence why you double your balance. So it's good. Any other questions, guys, before we move on? Anything else? All right, sweet. I'm going to do a fib run through because I've had a few questions this week about fibs. Let's find a nice chart. All right. What you might find as well, like in my journal, this is just something I've just thought about as I'm looking at this. But I see selling opportunities way easier than I see buys. I don't know why. Like my journal was full of sales, so just be mindful that your eye might just like appear to like different sort of patterns, different scanner patterns, different fib levels, etc., etc. I'm going to explain it on a downtrend to start with, and then I'm going to look at an uptrend. All right. So with fibs, I love fibs. I hated them to begin with because I didn't get. I use them multiple times in each trade. If you've got a question about fibs, please do interrupt. Just stop me, and we'll go through it. All right, sweet. So let's go over here for a second. We've got the whole point of this fib retracement tool. Okay, so it's fib retracement. So we're going to do a downtrend. So this part of the price, say this was the price moving down. In a downtrend, this is your impulse. All right, the next move back, this is called your pullback, the retracement, whatever it may be. Let me color that black. Okay, so the fib tool, the fib retracement tool, is measuring how far back this black line is against the impulse. So the impulse moves the market down. This is the correction, the impulse, the correction or the pullback back against this impulse. We want to know how far back that's come. So in a downtrend, you go from the top, you click the button and you pull down, you drag it out, and you go to the bottom of the price, so either the wick or the body. I won't get into that tonight, but let's just do wick to wick. So from the very tippy top to the bottom, and then this black line moving back, we're measuring how far back it's moved in percentage against the impulse. Now the golden number is 618. Fire your boss, whatever he calls it, the golden ratio, 618. That's kind of my happy place. Anything above that, 786 is like a discounted fair value gap, discounted price range. That's where the banks operate. 618 is where pretty much everyone operates. And the 382, if you know what you're doing, you're in a strong trend. 618. These are the key levels. You've got the 382, the 618, the 786. Anywhere around there, those pullback areas are ideal. Are absolutely perfect. Let me just do one other thing. All right, because I'm going to show you how the scanner helps you with fibs. All right. So, so that in essence is how fibs work. We're looking at, find it. All right, so we're trying to measure the pullback against the impulse. That's all fibs are. All right, fundamentally, we want to know how far back this has moved against them. And then we're looking to sell it down. So you know how we talk about setting up a trade where we're like, okay, is this 618 a structure? Yes, we do a little box back. You know, did the market do something like this before? And the impulse break it, and now it's retesting underneath it at 618. That's kind of the PRZ zone. That's kind of what we talk about when we're trading. So the fib level is just measuring this number. You know, if you've got the 618 like way above structure, but the 618's up here and the structure's here, it might be a 38.2, but this structure needs to really be at a fib level for me to want to be interested. All right. The way the scanner works, the scanner does a lot of the work for you. But this scanner is an absolute godsend. Probably the most, apart from us, we use it all the time. But it's kind of overlooked in the academy because it's just been there so long. I tell people I use the scanner and they're like, really? You like it? Yeah. So let me show you like EG. Right, let's look at this scanner pattern. These numbers, so X to D, this number here in blue, that is the fib level between X and D. Yeah? Tony, I'll come to you with your question in a second, mate. Let me finish this bit and then we'll do your question. No drama. So this blue box here, that is the fib level between X and D. B to D, this is your fib level. X to B, this is your fib level. The blue boxes are your Fibonacci ratio levels. When you know about what correction is and what like an irregular flat correction, these fib levels mean a whole lot more to you. But to get funded, you need to look at the X to D and the B to D. So if that's at 82%, but the reason I love a Gartley, let me show you a Gartley, is normally it's the 786 and the 127 extension. Here we go. Right, this one's pretty close. We've got a 774, so 786 area, and nearly a 127 extension in that one place. So then if you're drawing a box back from here to see if you're at structure, you've already got two fib levels at that one exact point. So it means the reversal is way more likely to happen if they're those key fib levels. So the scanner's doing a lot of the fib work for you. We just then go on the charts when we're drawing up our own stuff and find these areas. Tony, you want to come off mute, my friend?
Hi, Chris. Thanks.
Hey, buddy.
How are you doing?
I'm good, you?
Yeah, pretty good. So just so I'm clear, because obviously I'm probably quite junior compared to a lot in the group. So just to try to understand in terms of fib level. So
yeah,
what are we looking for? Because I know I've heard it like in the videos, you're looking for the 618 level. What does it actually mean? And sorry if it's very basic.
No, it's I'll send you some information about Fibonacci because it's basically mathematics, which is like the language of the gods.
Yeah.
So there's a sequence of numbers, and then you can divide that number and you get these levels.
Okay.
So it's like a mathematical reason for these numbers being important.
Right. Okay.
And the 618, the 1618, all these different areas, they're just sort of it's just the way price evolves. So Fibonacci is in like evolution of everything,
Okay.
in nature, but it's also in price.
Okay.
So it's pretty crazy, pretty deep.
No, but what I'm trying to figure out is that so on your diagram you've done a retracement. Now let's say if that goes to, are we looking for that to go to a certain level to tell us that this is definitely a reversal, or is that how you would think about it? Or
kind of build the picture. So it'll be like you know, if it's pulled back to the 618 and we're at structure and there's like divergence between this high and this high,
right?
Like all these things, there's like more and more reasons to think this is going to reverse.
Right. Okay.
So it may just blow straight through it, but the more like, so I said about like structure, divergence, fib levels. If you've got like multiple fib levels in one area, you know, it could be a candlestick pattern, a harmonic scanner pattern. You've got all these things in one area saying all of these things indicate a reversal.
And the waves as well, I suppose, isn't it?
Waves, yeah. If you get into counting waves, then you're in. Yeah, that's the pinnacle. That's where you're like a professional, like market technician. You know, you could probably go and get a employed role for a really good wage knowing Elliott waves. You know, that's not my sort of route, but if you understand Elliott waves in detail, you're going to do very well in this business. Very, very well. So there's different fib levels for different parts of the sequence of the trend, but at 618, it happens an awful lot. Pulls back to the 618, shoots down, or pulls back to the 618, shoots down. So it's like the golden number, especially for our strategy, like the intraday.
Sure. So then you're expecting, so after it goes to 618, what are we saying, that it's gonna keep going in the opposite direction, or?
So in this example here,
yeah,
what we're looking for is this pullback to the 618, ready for the next impulse.
Right. Okay. Yeah. That's right.
Yeah, because we're downtrend, we're looking to sell. So we're like, right, where you want to sell from high. So where's the high?
Yes.
The 618 is usually the high.
High. Okay. Got it.
Okay. If your 618's there and there's no structure, like the structure's up here,
yes,
then I'll be like, oh, maybe it's going to pull back to 786.
Okay.
Or the other way, the structure will be underneath. Then you'll get like a wick. You'll get like price force through the structure to hit the 618.
Yeah.
Then come back through.
Yeah.
So it's just a key level, but it can be. It's just another thing for us to add to our evidence that it's going to reverse.
Okay.
But drawing them, I think a lot of people, and me included, when I started, I overcomplicated it. I was like, oh, right, if I'm uptrend, do I go from bottom to top? Like, really, all that matters is that the retracement, the start of the retracement, you know, needs to cross the 23.6 first, then the 38.2. It needs to go up in percentages, not the other way around. So if I drew this the wrong way around, like that, I'll just delete this one for now. Then I'm measuring this retracement.
Mm-hmm.
Then I'm like, oh, it's already hit the 618 there.
Yeah.
But that's not, it's the 38.2.
Okay.
So the 618's up here. So they're like, they're like the opposite way around.
Yeah, of course, yeah.
You always want to, like, in a downtrend, anytime you're looking at the retracement, it should be bouncing off the 0 and working its way up the numbers. The numbers shouldn't be going down and up.
Sure.
Does that answer your question? You happy with that?
Yeah.
Amazing.
So that blue bit is our support and resistance. Is that what we're saying?
Yeah, that's what I'm trying to spot.
Okay.
Yeah. So when you've got a harmonic scanner pattern in here, that needs to be at support and resistance. So imagine you had like something like this going on in here.
Yeah.
Oh, it's horrendous, but you know what I mean? Something like that.
Yeah.
And then that D points at like really good fib levels.
Okay.
And we've got support and resistance. That's
Okay.
like the harmonic scanner patterns, like 16 confirmations. So you've got like 18 confirmations that it's going to reverse.
Sure.
And then we just go, are we with the trend? That's our job. Are we trading with the trend?
Yeah.
That's one.
Yeah. Perfect. Okay.
All right.
Thank you, Chris. Thank you.
Come out.
Another quick question. So sorry.
Yeah.
So if you're on a naked chart and you're not looking at the harmonic scanner, would the time to pull out fibs be when the retracement has started? So you've got that red line in your example just then. You have that red line, or yeah, any one of these examples actually. So
Okay. Yeah.
you would, you know, so say for this AUD JPY, you can see that. Can we go from? Oh, you know what?
Can we do it live?
Yeah. What I was gonna say is if we can do it from, I can't actually see what that is, but it's like near the 79.8, near there. So that would kind of be the top, I guess.
What, to
And then
this?
all the way. Yeah, go on. Sorry. And also, a question is: do you go from the wick to wick or body to body?
So this is something that I've experimented with after watching Elliott waves. So wick to wick is like a range. Body to body is like bang on. But the fib level can hit the range or the body. So I'd do both sometimes. And they'll be like, that can sometimes give me the resistance and support. I always start wick to wick. And if it's not quite bang on, I'm like, okay, well, what's, you know, I'd go like there to there. So I'd go body to body. Like you see, the numbers aren't that different, but they start to get more, you know, more different the higher they go. So that's 618. You've got two 618s. One's a wick to wick, one's body to body. And then I'd see, right, is that a support resistance area?
Could you go from the previous higher high?
Yeah.
Just to sort of see, because we're waiting for this one. We don't know where it's going to hit, but obviously it's hit from the previous higher. Yeah.
This one. But this impulse and this pullback.
Yes. Yes.
Yeah. Okay. Right. So let's change my candle. Yeah. So I'm going from the high to the low, put it out, and that's pulled back. I'm like really, it has to be perfect. So high to low, pull back to the 50%. Again, if you know Elliott waves, that was its structure. You see the top of that wick to the body. Wick went into it. I'd even go further back to check out what's going on over here. But yeah, that fundamentally is pulled back to the 50%. So it's like, it's a break and retest. But that's like mid-wave. So yeah, it gets a bit crazy up here because I've been working on it. Let's jump to the okay, so I've redrawn my trend line because this trend here just got demolished by this pullback. So we've got that one hit, the low was broken. Low here. After the hit, so it pulls back, hits, breaks the low. And then we've got it swinging straight back up underneath into that area for the second hit. Yeah, you see that? Sweet. So I would be measuring this. What's that? What fib level is this? And lo and behold, we've got a 618. Drop
Nice.
the mic. I drop the mic. Like that's what. So sometimes when you're too close into price, you're getting in the middle of the wave or like the impulse. It can be really hard to see. Am I in the trend or am I in the pullback? So like always like zooming out gives you that overall, like we want to be catching this bad boy here. This is the one we want to be hitting. If it was a third hit, and what I would really want to see this do is run the low, pull back up, give us the third hit, and then that be at like some kind of fib level. Oh my God, I've done this too often. 618. That is weird, but it's just because I do it so often. That's what I want to see. Like the third hit is just way more probable. The second hit is decent, but I would probably go less risk. But yeah, that's it. That's how we do it. So you go from the hit swings, the hit on the trend line to the hit on the trend line. That's the move. That's the pullback. That's like a flag correction. That's the impulse again. So the reason, so look, right. So I'll tell you literally, I'll walk through it now. Why not? We're here. So I'm looking at like, right, where's this going to end? Like, where's this going to end before it starts pulling back? And this is just me like practicing, you know, having a laugh. So if you draw the fibs backwards, it gives you the extension past the low. So I'm measuring this pullback, and we're expecting this impulse to go and knock out this low. But when's it going to stop? So is it going to stop here? Here? Like it gets like really guesswork. Like, oh, I don't know. I look over here. Is there a candle that looks nice it wants to trade into? I trade to the 127. The 1618 is the golden 5 ratio number. But I trade to the 127, so I don't have to panic, worry. It doesn't always hit the 168, but the 127 does hit more often. So that really, I'm wanting this to come down to the 127 and give me some sort of correction back up to the trend line. Oh, it's horrendous, but you know what I mean. Hit the 127, back up to the trend line, look at what level that is. Is that a structure? So like trying to get it off this low. Something like that. So if that, I do this all the time. I just draw like, oh, this would be nice if this happened. Then when it does, I'm like, sweet, right. Is there divergence between the second and third hit? Brilliant, there is, wonderful. Is there divergence from this high to this high? Yes, excellent. Is that a fib extension level that I'm interested in, like a 127 or a 1618? Yes. Okay, cool. What's this fib level? I've done it again. Okay, 18. So we've got a 618. We could have a 1618 extension. We've got 2 fib levels at structure. We've got divergence. Wait for it to trigger. We're in. We are in. So that's how I use my fibs. You can use them for targets as well as pullbacks. The pullback I use more. The fibs is more like the extension. It's like, where's this going to end? Where's it safe for it to end? So we're trading with the trend. We always want to take out this low. This is always the target number 1 because it should run the low if we've got the trend right. So if it's getting to the 786 every time and then busting a move the other way, then we might have missed something. Skill might not quite be there yet. But if we're trading the third hit and we've got the fibs, we've got all this confirmation, AJ, you know, if it follows my lines exactly, you know, then that will hit there on like the 31st of October. So we're planning for a future trade now. Like I wouldn't get in that now because we're middle of the move. So I'm looking to get in from the peak, 1 or 2 trades, 3, 4 trades a month, like 1 a week. If you catch one of those, you're laughing. I was looking at A-Chef. This was absolutely beautiful as well. So we had lovely structure. Forgive all my labels, a little bit funky. But it just came shy of the trend line, which kind of put me off. and there was news that was triggering overnight. So I didn't take it, but that's just fallen off the line, hit the structure, all these fib levels in this structure, 38.2, 618, 1618, 2618. There was another area at the top I was interested in as well, kind of it wasn't clear. Like whenever I'm like, oh, it could go higher, I'm less likely to want to trade because I'm kind of confused. I much prefer to see, like on AJ, like, oh, this is happening. You know, it'd be like quite clear. There's no structure above, lines up as nicely as this one. So hey presto, this does happen quite often. EA, I didn't hit my trend line here, but it busted out the flag. It's now making its way up. This is all I do. I just look for third hits every day of the week. CAD JPY, bang, third hit, dropped. The second hit to the third hit, a little gander. Okay, getting a bit of a joke. But the 618 is here. Let me get rid of this. And back into the 618 area. Bit sloppy, it didn't hit it. I prefer it to hit it than not to hit it. But you can see it hit the trend line, then dropped. Very, very nice. Let me just go. I've just seen some comments. Rex, you said please repeat. Have I repeated?
No, it was more to do with the Gartley, but you've done it, so don't worry about it.
Sure. Okay, mate. So where do we want to get the trade in? Chloe, what do you mean?
You actually walked through it, Chris, so that's fine.
Oh, okay. Okay, cool. Yeah, Fiona, you know what you're doing. You know what you're doing. Third hit, Fiona. Good fibs. Yeah, structure. Wait for your scanner source confirmations, and we are in. Some wicked questions on the group recently about Stotch. Rex, I think that was you. So just to clarify with everyone, the Stotch here, when I'm entering a trade, I'm just looking for what color's on top. I don't care where it is. All right, especially on the 15-minute. I'm looking at, right, is red on top and I'm selling? Yeah, sweet. Right, what's the PMI doing? Okay, that's triggered. Yeah, AO's blue, triggered. Wicked. When it lines up, pull the trigger. I got sort of paralyzed myself with trying to make it perfect every time. Like, oh, let's see if there's a 15-minute triggering just outside for a sell, just outside of the overbought. And all I did was miss the opportunities that, you know, don't come along that often to trade. So yeah, I'll just cover that very quickly. All right, sweet. Okay, we've got 15 minutes or so. I'm in no rush, but I just want to respect your guys' evening. I want to do a very, very, very fast lot size calculating test. So for those of you that know how to do your lot size, you know, switch off for 5 minutes, but it's the most important thing to learn how to risk manage. You have to know how to risk manage, not only to get your account, but to keep it. All right, keeping your account is probably harder than getting it. And being able to say, right, when I sell this, I'm going to do like a mock-up here. When I sell this currency, if it hits my stop loss, I lose £700, 1%. That's honestly, that is where you all have to know it. You all have to be able to manage that. I put in the Fastrack to Freedom group, I put in the lot size calculator link for my FX book. Right, we're only going to do like 5 or 6. All right, and I want ounces in the chats. So let's set up this trade. Let's say this candle here, you've decided that's hit every single, that's hit all of our confirmations. And we want to place a trade. We get in at this level. We put a stop loss above structure, way above the high. We have a 40 pip stop loss. We've got a £70,000 account. We want to risk 1%. This is AJ. What is my lot size for this trade? Pass this finger first. I'm going to do it with you live. Boom. Who's got it? What lot size am I putting in before I enter this trade? £700, 1% risk, 40 pip SL. Any more for any more? Any more for any more? Correct, that is easily done. Yeah, it's 2.61. So for those of you that didn't answer, those of you that didn't answer or weren't sure what to do, honestly, this is the most important bit of trading. So on the position size calculator, you have your currency pair, AJ. You have your currency, pounds. You can select whatever currency you're going to trade in. I trade in pounds. £70,000 account size, 1% risk, 40 pip stop loss. Don't change that. Calculate 2.61 lot. That basically means if I hit my stop loss, I've lost £700. That means I'm down 1%. That means, okay, I live to trade another day. Doesn't matter about losing. That's what I meant earlier in the week previously. Losing's part of the culture, happens, but you need to know how to lose. You lose where you work out your risk, and then it doesn't matter. It doesn't matter. Right, so we'll do the same for the next one. We'll do the same 70,000, 1% risk. Let's go to EN. We're going to be buying from here. So we've just bought here. We've got a 37 pip stop loss. Everything else the same. 37 pips on EN, 1% risk. What is my lot size? What is my lot size? Oh, Rex is in there. Bosh. No messing. So £70,000 Great British Pound account. EN, 37 pips, 1% risk, 3.69 lots. Rex, you're in dollars again, mate. Yeah. 3.69. Buzzing. Right, we're going to change the currency. So go to your MyFX book. We're going to go to US dollar. We're going to have $200,000 account. We're going to be risking 1%. 1%. We're going to go with, let's go with NJ, NZD-JPY. And our stop loss, all right, we've caught this one, an absolute beauty. We're right at the tippy top of the move. And we've got a 15 pip stop. And we're looking to ride this one down. 1%. 200,000 USD, 1% risk, 15 pip stop. What's the lot size? Whew, big. Right, Rex has got it. Rex has passed. Rex can move on to the next training session. Good man. Yeah, 14.56 lot. So basically all we're doing is this, we're evaluating, we're putting a valuation on this red box. If it hits the top of the red box and we're out the trade, we want to make sure we're out the trade and we've still got an account. Yeah, that is your trade. You missed it. Missed it, Rex, I'm afraid. I'm joking. Okay, you've been a nice trade there. So you're just basically protecting yourself. You're protecting the money. You're protecting your account. You're giving yourself chances to lose, where it doesn't kick you out of being a pro trader or losing your test, whatever it may be. I remember we've done the videos before of 3 types of trader. So you've got the boom and bust. That's someone who cannot work out lot size. You know, they'll just chuck in 15 lots, and their losses sometimes are bigger than their wins because they haven't worked out risk reward ratio and their lot size. We don't want to be that guy. That's like a roller coaster. We don't want to be that guy or girl. That's not where we want to spend our time. We want to be efficient, prolific, smart. We need to work out our lots. Right, let's do one more for good measure. We're going to do GA. We're going to have a $50,000 account. For the new guys, I want to see you on this one. Of course, we're going to sell because I like selling. Why not? Let's do a 24 pip stop. So $50,000, 1% risk, 24 pip stop loss. What is my lot size? We will legend. Legend. Right, that was quick. That was quick. So the important thing about lot size is you can't change it once you're in a trade. So this has to be done before you click the button. So scan the source works in our favor for that, because as it looks like it's going to trigger on the 15-minute, you've got time to go, right, if it triggers here, I can work out the stop loss from where it is now, and it will only be a couple of pips away from where you are. So you can get really close. And then as the candle closes, bang, you get the exact pip size, just tweak it slightly on your phone, bing, bang, bosh, you're in the trade. All right. Alrighty. Is the risk always 1%? That's down to your own preference, to be fair. I risk 1% a trade, but we do have 3 entries on a trade. So you've got potential to have a 3% exposure on one trade. What I would say about risk is, if you can set a trade and leave your phone and not be worried about it losing. So £700, when I first started doing it, I was like, oh my God, that's so much money. Now I'm like, no, doesn't bother me. So the 1%, well, the risk rewards, so good question. Risk rewards based on how many pips the stop loss is and how many pips the profit is. So you can risk 3% on a 1 to 3 risk reward and make 9. You can make risk half and make 1.5%. So the 1 to 3 is just, yeah, that's another thing. That's our risk profile coming in, where, you know, we want to risk, you know, if we're doing 1% to make it easy, we're risking 1% to make 3. Yeah, that means we can lose more than we win and still make money. Never do less than a 1 to 3. And I always talk about 1% because that's what I do. I do 1% risk. So I know I've got 10 trades. I can lose 10 times in a row before I lose my account. Yeah, Manny will refer to 1 to 3 in his boot camp. Yeah, kind of like the least. Like the least you should do is 1 to 3 if you're looking for like our type of trade. There's people that do 1 to 1s, 1 to 2s, you know. It just means you have to trade more often. The 1 to 3 is my rule, but yeah, you got to go with whatever floats your boat. That works for me. It works for many of us. Okay. So I'm going to have a very quick look at the scanner, and then we'll call it a night, because I think it's been a really good call. Not best. But we've been through. I want everyone to do 100 goals. Like, please do it. Please do it. 100 goals, rank them out of 1 to 10. The FTMO update, we've done the fibs, we've done the lot size. Let's have a look at the scanner. So, Rex, with preferred pairs, or is it fair game? Oof. My journal tells me I used to have my favorite pair would be GN. I haven't traded it much recently. It's been more the JPYs and the USD. So our strategy works on anything. It works on crypto, it works on indices, it works on absolutely everything. So I literally just use it on whatever comes up on the scanner. So it just widens our opportunity to trade. And also when you're looking at, say, AJ, there is one that happened on, remember. But if, say, this fails to take the swing low, so it turns around from here and goes bullish, breaks the trend, then we've got a new trend happening. So then it's going to be weeks away before the third hit comes. So yeah, I just, whenever a third hit comes, whatever pair it's on, I take it, as long as I see it. Right, let's look at the scanner. So just remember what we do, EG, I'm going to go through. What all we're doing is we want to make sure that we're trading with the trend. First question. So this scanner is calling a sell because the TPs are below. This, just from zooming out very slightly, EA, and I've been tracking this anyway, is on a bull run. Right, wherever the line starts and finishes, I know because I've got it marked up. EA, I'm never selling EA, I'm looking to buy it. An uptrend. If it's in an uptrend, we only look to buy. If it's in a downtrend, we only look to sell. It's EA, counter trend, correction, no thanks. EG. So as we zoom out, we can see that this has been going down quite nicely. Quite some time. You've got the highs up here that haven't been taken. And we've got a nice trend, you know, it's underneath the trend. Now I am in this, I am actually selling this, and I'm selling it back down to this low. I want it to knock out the low. The only thing, if I show you on my chart, so Will just sent me this on a DM with his markup, and it's like exactly the same as mine. So perfect. Right, so we've got the third hit. Only thing I don't like. Anyone tell me what I'm going to say? The only thing I don't like about this trade. Well, I've gone pretty low risk. Anyone know? It's in the trend line. Oh. I do not like the fact that it started correcting before this low has been taken. And it's quite a vigorous correction, not like a little pullback here and then goes again. It's actually pulled back through structure. So my rules are, it's a third hit. I take a third hit. But ideally, we would want to see like AJ. If you look at AJ, it's beautiful. Like this came down, came down, came down, came down, boom, knocked out all the lows, all the previous structure over here, all these swing lows, take them all out. Then has a vigorous pullback. That's fine. It's done its 5 wave, and then it pulls back to hit the structure at a fib level, then goes again. If this doesn't break underneath, I'm going to be looking at a low risk opportunity from here. So if it starts pulling back from here, not really too interested. Plus the fib level will be disgusting. So if it knocks out the low and does what my lines do, then I'm like, hey ho silver, I'm going all in. But I don't mean that as a gambling term. I mean, I'm going 1% 3 times. That's my limit. And I'll ride that baby down and knock out the next low, then go for the next extension. So EG has not done that. The second hit hasn't gone, that impulse hasn't gone and taken out the previous low, which is a sign of a trend switch. It's quite early on in this trend for it to be switched. So I took a small position and been fighting around at entry, okay? Kind of giving us, just playing around. So not convinced, not going to lose any sleep over it. We've got Euro and GBP news tomorrow, so who knows which way it's going to go. And I'll either lose or win. Happy days. There's some other stuff I've identified a bit lower down, but another day. So scanner, hit, third hit, bang. Let's take it. AED CAD, zoom out. All right, so it was downtrending. It's not clear and obvious. It's definitely not a third hit of anything. So just from, I would obviously spend a lot more time doing it, but it doesn't look good. I don't like the way that this high was beaten. So this took out this high. I'd want it to stay below the structure. It's below this high, but this was the last swing high, so it's broken the high, and that was calling a buy. So this could be a new uptrend. I want it to go and run the next high, come back. That'll be our second hit. Go again, third hit. So AED CAD, we're looking at, if this is a trend switch, it's got to do an awful lot before we get into it. Right, NJ.
Chris, can I ask, you know, for EG, you said, yeah, EG, yeah. When I looked at your lower lows, higher lows and whatnot, so I've always done it like it has to be higher than the other, but yours they don't look like the staircase.
What do you mean, like here?
Yeah, so that looks to me like you're just basing it on if it touches the trend line, then you're in.
Yeah, so third hit. So there is more to it, but I don't want to complicate it.
Yeah.
But there's like a Elliott wave here, and then a big correction.
Okay. The fact that low there hasn't beaten previous low, but because of your analysis, you're saying that it's valid.
For me, third hit. So preferably I would want it to go and knock the low before it comes back.
Yeah.
So I'm in at like 0.5%. Like one entry. Like one entry, 0.5%. So 1 to 6. So I'm risking 0.5% to make 3. But yeah, if that had broken the low and then swung back for a third hit, but I'm more interested in the third hit. But that's where my risk profile will change if it hasn't broken the low first before it comes back. Rex, cheers, mate. Enjoy. Does that make sense?
Yeah, thanks.
Yeah, because the thing, we don't get many third hits that happen that often. So, it's kind of really scrappy anyway. The GBP and euros have been like I don't know, like they're in this channel and they're kind of getting a bit skewed. So look, it's definitely not like a perfect setup, but it is a scanner calling sell in a downtrend, third hit. I was kind of.
At the same time, that third hit looks like it's just going to hit or is at structure anyway, so it will go down.
I like your optimism. Thank you. Yeah, I hope so. I guess we never know, and I would prefer to be in a trade that loses. That's the third hit, but just play the risk downloads. And then if it goes, and the third hit's more important to me than anything, because it's when the trend is more established. So by all means, this is not ideal, because you've rightly identified the swing lows are going the wrong way. The staircase needs to go down, but I've played it low risk. From a third hit point of view, I think if you go even further back, the third hit actually comes from up here. I haven't done this yet. This is from Will's analysis. Oh, maybe not. But that's a 4-hour structure. So I'm looking at I'm looking at the 1 hour. Yeah, that's that. So yeah, the scanner EJ was interesting. I really, really liked this. Oh, really liked it. So you zoom right out, you can see that it is kind of bearish apart from this section, but as we get closer, you've got a market structure reversal here. So you've got like a left shoulder head, right shoulder reversal. Swing, you've got the 1, 2, 3, 4, 5 correction, then back in. But look where this entry is. Look where this entry is. Perfect PRZ. I drew it up and marked it up as if I would enter it. And look, it's absolutely spanking. But the DC channel wasn't hit, so it didn't trigger my strategy. But in a Elliott wave scenario, that's like the next wave down. Break structure, pull back, fib level, I think it was 38.2. Close. Yeah, look good. But not ideal, not really what you want to take on the test. You want it to be like perfect. That's perfect. Cool. EuroCAD selling. Messy. GA. Selling. I do like the way so with GA, it's taken out all of this out with this impulse, and it's swung back underneath, but that's our first hit. So I'll be looking at the fib level. Oh God, I hate it. So it looks it's not really a good level. See, it needs to go and run the low, swing back up, run the low, swing back up. Yep. Cool. Right, let's call it a day, because it is so we're over, which is good. Guys, thanks for all your comments, thanks for your interaction. Please keep practicing in the Fastrack groups. Just chuck in your chart. This is what I'm thinking. What do you think? You can answer each other. There's a wealth of experience now in the team. Feel free to call upon it. No one's going to laugh or everyone's there to help. We've all been at the stage everyone's at. And I still share charts with, people that I work with closely. So get in the habit of drawing charts every day, plot, do your fibs, do your lines, do your structure, look at the scanner. So I use the scanner as like a signal, like, oh, this has got a potential move. Do I like the move? Is it with my trend that I've identified? Yes. And let's go. Let's go. That's kind of how I do it. Nice one, guys. Thanks for being so interactive. You're free to hop off. I'm going to close off the Zoom now. So thanks for watching this back if you didn't make it tonight. But get on the live calls, guys, because that's where we really get interactive and can go through things in more detail. So over and out. I'll see you guys next week.